I know myself, I have some funds which are so-called high dividend funds. What is the dividend yield? 2%, 3%. So you're seeing a lot of this money now begin to search in India, in China, and in other parts of the world for this higher yield. So that's the reason why you see this strange situation where economic growth may be slowing down a little bit, not that much, but you're seeing the markets continue to go up.
Mark, financial markets, they follow a cycle or a pattern. 1980s was dominated by Japan. Then in the 1990s, it was technology, TMT, technology, media, telecom, the internet companies got created. Followed by the 2000 to 2010 when we saw boom in China and India. And in this decade, it's been all about America. The Googles and the Amazons of the world have really become behemoths. What is the next trend? Where do you think the puck is going to move? Because in investing, there is no point in discussing what happened yesterday. We need to figure out what will happen tomorrow.
Yeah, the future is in service. And of course, software is related to service because you need software in many cases in order to provide services and to make services more efficient. But the bottom line is that the future is in services. And I'm afraid that in many cases, and maybe the case here in India, the service, the increase in service sector is not properly measured by the GDP statistics. So you have to be very, very careful when looking at these numbers because a lot of them are oriented towards the manufacturing sector, whereas the growth now is in services. And one of the problems we have in emerging markets is that if we look at the emerging markets index, it really doesn't reflect what is really happening. For example, the minister just talked about Amazon is here, WhatsApp is here, millions, tens of millions of Indians are using WhatsApp. Is WhatsApp an emerging country, company or not?
It is.
We have to really consider this going forward because if you look at the MSCI or the Financial Times Emerging Markets Index, these companies, the multinational companies, are not included, whereas many of them are becoming emerging market companies. So this is a real challenge for us in emerging markets.
Within India specifically, in the past, you bought stocks like Reliance, you bought Sesa, you've invested in commodity stocks. So if you have to take a 3 to 5 year time horizon, where do you see value in Indian markets?
In the future, I believe it'll be in this service sector, what I mentioned. Companies like Amazon and others that provide services more than anything else, distribution services, information services, Google, these companies, I think, of course, there'll be the Indian variety of these companies will be where the growth is going forward.
Mark, at the global level, what we have seen is that we've seen, and just pay attention here, the data point I want to share with the audience here is that this is the longest bull run in the history of America. Ever since we have documented data, I've been told that American economy has never seen 11 years of economic expansion. How would you explain that?
It's simple because if you look at the transformation of the economy, you see that we've gone from a manufacturing economy to, as I said, a service economy, a software-oriented economy. And one of the things that is not measured so accurately is the increase in productivity that comes a result of this software revolution. So although we may talk about the Googles of this world, the Facebooks of this world, but the reality is that down at the middle and small segment of the company orientation, you're going to find the impact of this revolution in the internet and software is having an incredible impact on productivity. So I've just finished another book which talks about the myth of inflation. There is no inflation. Productivity is increasing at such a rate that we're seeing a decrease in the prices of goods in relationship to earnings, of course.
Mark, so if you have to really talk about emerging markets, what has affected emerging markets in last couple of quarters is trade war. trade war, when the tariffs rolled in from March 2018, emerging markets have done half as well as what US markets have done. Trade war is back. It's a reality.
If you look at the last 10 years, actually the last 15 years, with a few exceptions, emerging markets have underperformed the US market. But as I mentioned, a lot of the US growth is emerging markets growth. If you look at the big US companies, let's take Boeing. What percent of Boeing sales are to emerging market countries? This is the kind of thing you've got to look at. So the growth of the US economy and the growth of US stock market is to a great extent attributable to the emerging markets. However, if you look at what's happened during the last 2 months, 3 months, the emerging markets index is now beginning to outperform the US market. And I believe, as I mentioned, the reason for that is that some of this money in America and Europe in search of yield is moving out into emerging markets.
So I want to take the clock back with you and talk about when you started investing in India. What was your first big investment in India?
The first big investment in India was with Tata.
Which stock did you buy?
And the reason for that is that we felt safe with Tata. The corporate governance was good, and we felt that the reputation was so good that it was a place to invest. And the next one was probably Reliance.
So if you have to, let's say, identify the next Tata and the Reliance for next 10 years, which groups in India would you bet on? Because Tatas and Reliance, they're big companies, great companies, but they cannot be multi-bagger ideas now. You like to identify small businesses and which have potential to scale up. I mean, you like to catch them young and see them grow. So which corporate group or company would you bet on in India now?
Let's take Reliance and Tata. Now, what's happening is that components of these companies will be coming up. So there'll be an opportunity to invest in those individual components going forward. But if you look at the whole landscape, there's so many other companies that we can look at.
Give me an example.
I can't tell you because we may be investing in it, but generally speaking, it's those companies that are utilizing the internet and technology to grow their business.
Has there been an instance in Indian markets where you have literally taken a haircut with investing?
How many hours do you have? You got to consider that out of 10 investments, you're lucky if you make a lot of money on one. I mean, basically, that's the name of the game. You will always have haircuts along the way. Why do you think I'm so bold?
But Mark, I've always seen you like this.
What's that?
I've always seen you like this. So you had a lot of problems with Indian companies.
By the way, just to give an example of opportunities that you see in India, I remember this was about 15 years ago. One of the up-and-coming finance companies was having an IPO, and they were enthusiastic, and they were going great guns and everything. And we said, gee, we got to be careful about these guys. It looks kind of dicey. It became one of the largest in the country. So you really sometimes go out to make a bet, but in my old age, I now try to look at some of the fundamentals more carefully. Not the price-earnings ratio. Price-earnings is almost irrelevant now, because with interest rates at these low levels, you can tolerate a very high PE level. But we look at return on invested capital. We look at whether the company pays dividends, which is an indication of good corporate governance. We look at the debt levels. Those are more or less the ones that we put focus on.
Mark, every 10, 12 years, we've always seen an accident somewhere or the other. It was Asian crisis, followed by the TMT boom and the bust. Then we saw concerns which were centered around taper tantrum. I'm happy and touch wood that we've not got bad news. But is bad news waiting to happen somewhere? And the reason why I'm asking you this question is, Mark, because when I started my career, the first report I read was that Mark Mobius has called that the US technology stocks and TMT stocks are a bubble zone. And 6 months after you made that prediction, NASDAQ came crashing down. You got Mr. Talib coming after this. I'm sure he'll scare everybody. But I want to hear from the optimistic first.
By the way, I got into a lot of trouble that time because I happened to be in Paris and we were giving a press conference on emerging markets. And the Reuters reporter asked me, what do you think of this dot-com boom? And I said, it's going to be a bust. It's going to go down dramatically. And he rushed out and put that on the wire. And the next day, the market went down by 3%. Probably not because of me, but coincidence. And of course, I got a call from my boss. He said, could you keep quiet? Because we've got a lot of these stocks in our portfolios. But, you know, these kinds of events are often, I mean, I usually look at them as opportunities. If there's a big crisis, then there's usually an opportunity to get the stocks that you wanted to buy that were too high in price at a much lower price. So what I try to remind people is that doesn't mean you're going to, you know, market time all the time, but if you can take the opportunity to get those cheap stocks when the markets are, when the blood is on the street, so to speak, then you could probably outperform. But these events don't come along very often. And the problem in our business is that when the markets are going up dramatically, people throw more money at you. And then you're forced to join the party. Just like the president of Citibank used to say, when the music is playing, you got to dance. So that's one of the problems we have as managers.
So you've just raised capital. About a year and a half ago, you've raised a new fund that's in your personal fund. How are you investing it? Are you fully invested? Are you waiting for bad news? How much of your allocation is there in India? And within India, are you looking at increasing your India exposure?
We're going very slowly. In fact, we now have about 15% in cash. And the reason for that is that we want to engage with companies. The orientation of this fund is very different from what we were doing before. Before, we were not so involved in getting companies to change their governance. Now we're engaging with these companies to improve governance, and that takes time. And it means that you're not going to go into a company unless you have some indication that they will cooperate with you. So it's a completely different orientation.
Mark, investing is about buying gold at the price of silver, right? Buying gold at the price of silver. You buy something which is cheap. And if you buy a good business which is cheap, then when the earnings come back, you make a lot of returns. The problem in this world, in this environment, is that very few good businesses are available at attractive valuations. So how does one invest now? Last 10 years, frankly, it's been good returns for equity investors. It's been good return for global investors. Bond traders have also made money. Commodity traders have also made reasonable return. For next 5 to 6 years, are we in for the last hurrah before markets peak out, or are we in for flat to no returns?
See, I think the big mistake that we made in the past, and many investors make, is that they look at the price-earnings ratio, they look at the price-to-book value, and they say, gee, this is selling at 5 times, it's selling at below book, it must be cheap. No, not necessarily, because the market looks forward, the growth. So that's the reason why what I do is focus on return on capital employed. Because if a company can have a 20% return on capital employed, that means they have the resources to grow. And they can put more money into this growth plan in addition to giving dividends. And the sign that I look for a company is that they can do both. They can pay dividends and also grow, which is why we talk about dividends in companies. So I think that's a big mistake that people make, is that they think, gee, this looks cheap, but it really is not that cheap, because the future is not bright for companies like that. And it's a mistake that we often made in the past.
So I'll talk about your thoughts on the large sectors. The biggest sector in India is financials. That's 40% of the total index. You've got great banks. You've got great insurance firms. You've got PSU banks which have not made wealth. But stocks like Kotak Mahindra Bank, HDFC Bank, Axis Bank, if I share the numbers with the audience, it's a breathtaking number. They are up more than 50 to 100 times in 20 years. Do you own anything there? Would you like to buy something in Indian financials?
No, not really.
So then what are you buying?
Because we find that, You know, it's really interesting when you look at the index, it's heavily weighted towards financials. And you might say that if the financial weighting in the index was less, the index would probably be performing better because the other companies are doing better than the financials. And at this stage, as you know, there's a real problem with the financials with bad debts.
So you will not buy Indian private banks and financials?
No, we will look at them, particularly in the non-bank financial institutions, which have really come down a lot. And if we can ascertain that they're going to survive, then we will look at them.
Consumers, another large pocket of the market. You've got great companies like HUL, Nestle, Britannia, fantastic, well-run, no-debt companies, great cash flows, great ROE, great ROCs, expensive valuations. Would you buy them?
Definitely, we'll buy them.
So you're happy
As
to buy
I mentioned,
these expensive stocks?
when you're talking about valuation, talk of PE and price of book, right? This will not bother us. You know, it can be a very high, because don't forget the market is looking at the growth prospects. That's where you want to go.
Let's look at another big pocket, which is IT services. It's a stable business. Zero cash companies, great return equities. The problem is that they're not growing at 100%. They're growing in the range of about 9 to 10%. Indian IT companies have a huge advantage because it's export dominated. Dollar-facing franchises. What are your thoughts there?
Yeah, I think some of these software companies have sort of reached the plateau where the growth prospects are much less simply because the competition has gotten much fiercer. But that does not mean that they're all going to be in that condition, because some of them have begun to develop their own software packages that can be sold globally, independent of the IBMs and the other major companies. And that's where the growth will be. And I think the breakthrough will come when they're able to reach that new plateau. So what I would do is look at these companies to determine which are going to break through that sort of floor and begin to compete with the IBMs of this world.
When you look at your investing career in India, when you started investing, has growth pleasantly surprised you? Were you anticipating that the Indian economy could be a $3 billion economy on course to become a $5 trillion economy? When you started investing in India, we were at about $400 million. We are almost 8 times, 9 times of that now.
Well, when I first started investing in India, it was chaotic. I didn't expect that this would happen, frankly, because I remember it was physical delivery of stocks. People were carrying the stocks around in these bamboo poles from one place to another. I mean, it was chaotic. So it was difficult to imagine that we would have this kind of growth rate going forward. But I would say about 5 years, well, more like 8 years ago, I saw that there was an incredible opportunity for growth. And now, of course, situation has really changed.
Mark, if somebody walks up to you after this interaction and says, look, Mark, I like the way you invest. Here's my check. You're free to invest in only one stock. Only one stock. I don't care about what happens tomorrow, what happens next month. But Mark Mobius, 15% profit is yours or whatever return you give me. But you're allowed to buy only one stock. What will you buy?
I would buy the stock that has over 20% return on capital, pays a dividend yield of 3 or 4%, has a debt equity of less than 50%, has no multiple share classes, one share class, and has a turnover of at least $2 million a day.
So why don't you make life simple and tell us the name? You've done your homework. The pause means you know the answer, you don't want to share with me?
I'm afraid the minister that just left will not be very happy when I mention the name.
Is it Bharti, your idea by any chance? Okay. Which is one stock you'll never buy? Let's talk about it. That's an easy one to answer.
No, I think the stock that I would never buy, and again, going back to the corporate governance issue, companies that don't have good corporate governance, you should avoid. you really should avoid. And you get a sense. Also, you get a sense of companies when you speak to the managing director, the people that control the company. What is their attitude towards investors? If their attitude is that, hey, investors are secondary to our orientation, then you don't want to invest. So it's really about corporate governance at the end of the day.
Okay, Mark, just a little bit about your life. Is it true that you were managing over $100 billion at one point in time? You had a private jet, and you actually had a tailwind which had written on it. So the tailwind of his private jet had Mark Mobius written on it. Is it true?
Well, the call letters of the plane was N, it stands for North America, 328. 328 in Chinese is pronounced Sangyi Fat, which means you're going to become wealthy, and MM was the last two letters for Mark Mobius.
So how does it feel after private jet to fly Air India and come to Mumbai?
I've come down to earth now. But there's certain advantages, because if you're in a private jet, one of the advantages, you usually land at a different part of the airport with a private terminal, and there's, the formalities are done. You just go immediately to your car. But there's no shopping. There's no, of course, we used to have movies, but usually the system didn't work very well. I go on the planes here, I get the latest movies. So there are advantages and disadvantages, let's put it that way.
Well, Mark, always, lovely interacting with you. Thank you so very much all the way coming down, this time not in a private jet. Yeah. But thank you very much for coming down, and thank you for spending time for joining us for this conference.
Thank you very much.
Let's put our hands together for Mark Mobius.